This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC Plus oil producers agreed on Wednesday to stick to their plans for a modest output rise in April, ignoring the Ukraine crisis during their talks and snubbing calls from consumers for more crude even as crude prices rocketed higher. Oil prices shot above $110 a barrel this week, hitting peaks not seen since 2014, as Western sanctions tightened on Moscow over its invasion of Ukraine and disrupted oil sales from Russia, the world's second-largest oil exporter. By 13:15 GMT, benchmark Brent was above $113. The Western measures have deterred many buyers of Russian crude and even caused problems for exports from Russia's neighbor, Kazakhstan, another member of OPEC+.
Oil benchmarks are hitting multiple price and spread milestones across several key markets as the fallout from severe sanctions on key exporter Russia sows confusion and panic among global crude oil traders, shipping firms and importers. Brent crude topped $112 a barrel on Wednesday, the highest since 2014, shrugging off news that several developed countries plan to release a record 60 million barrels of strategic petroleum reserves to cool prices. The oil industry has been gripped by acute risk aversion in the finance and shipping sectors after several nations including the United States sanctioned multiple Russian entities following Russia's invasion of Ukraine, though Washington has explicitly exempted energy products from the Russian measures.
Moving on to the top news in the energy sector.
Germany on Wednesday took more steps to diversify its energy supplies in a bid to cut dependence on key supplier Russia, announcing a €1.5 billion order for non-Russian liquefied natural gas, LNG, and slowing its exit from coal. Pragmatism must trump every political commitment, Economy Minister Robert Habeck told public radio Deutschlandfunk in remarks that would have been unthinkable by a Greens minister a week ago. The security of supplies must be safeguarded, he added, addressing fears of blackouts and rationing of gas for heating.
The United States is very open to imposing sanctions on Russia's oil and gas industry as it also weighs the potential market impact, the White House said on Wednesday as global oil prices touched 8-year highs and supply disruptions mounted. In television interviews, White House spokeswoman Jen Psaki said while Washington was still considering hitting Moscow's vast energy sector over Russia's invasion of neighboring Ukraine, the impact on global oil markets and U.S. energy prices were a key factor. Asked if Washington and its Western allies would slap energy sanctions on Russia, Psaki told MSNBC, "We're very open."
Next, we have the top news in metal markets.
Steel futures in China, the world's biggest producer of the manufacturing and construction material, rose to a more than 2-week high on Wednesday on expectations the Russia-Ukraine conflict will boost demand for Chinese steel overseas. Russia, which is facing an unprecedented wave of economic sanctions from Western allies over its invasion of Ukraine, accounts for an estimated 10% of global steel trade, while Ukraine has a 4% share, according to Huatai futures analysts. The supply interruption will force some major buyers to seek alternative sources, and currently only China can fill this huge market vacancy, the analysts said in a note.
Gold slipped on Wednesday due to an uptick in risk appetite and U.S. bond yields, while concerns over a supply crunch that may follow sanctions on Russia kept the price of auto catalyst metal palladium near a 7-month peak. Spot gold was down 0.7% to $1,929.12 per ounce by 10:07 a.m. Eastern Standard Time, 15:07 GMT. U.S. gold futures eased 0.6% to $1,932.30. We're seeing a more of a technically motivated pullback as there is a bit of a lesser need for safe havens. We've seen equity markets stabilize, said David Megger, Director of Metals Trading at High Ridge Futures. We will now look at the top news in the agricultural sector. India has asked Indonesia to increase palm oil shipments to the country to compensate for a loss of sunflower oil supplies from the Black Sea region due to the Ukraine crisis, several government and industry sources in India told Reuters. India, the world's biggest buyer of edible oil, relies on top producer Indonesia for more than half of its palm oil imports, but has been worried by restrictions Jakarta put on its exports in January to calm local prices. Limited palm supplies, followed by the halt in exports of sunflower oil from the Black Sea region, which accounts for 60% of world sun oil output and 76% of exports, have sent global vegetable oil prices to record highs.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.